All right, welcome back to Stock Tricks with Nick for this week's Midweek Movers live stream. It's been a very tough time in the market, basically since, when did we top in the NASDAQ here? Let me change that to the track price. So we topped on the NASDAQ 1122, and since then it's been a very low probability trading environment. We've had a couple bounces here to end the year, and then we tightened up and rolled over, lost the 50-day moving average, and have been in a pretty fierce downtrend since. Basically, what I want to be covering today is a general market outlook, go over the indexes, IWO, ARK-K, some of the growth ETFs that I kind of track, go over some previous market leaders, Tesla, Ford, Qualcomm, a bunch of those got hit today. Also want to go over, honestly, I only have 2 stocks on my watch list going into the second half of this week. It's not a pretty market, but we will cover what a follow-through day is and why I'm using that to kind of start to enter the market with long positions. I've tried a couple while we were pulling back here with some names that were holding up well, but got stopped out, thankfully in the money, like really quickly. This has been a very quick trading environment if you're gonna trade at all. Sitting on the sidelines is probably the best thing you could do for the last couple weeks, but made a couple minor trades, but really nothing sticking. So first, we'll start with the Qs because I have it up right now. Let me see. Yeah. So we lost the 50-day on the 5th. And then on Monday, last Monday, it looked like we potentially was putting in a low where we gapped down in the morning, buyers stepped in, and then we had that 2-day rally, but we never tested the 50-day simple moving average. We ran right back into the 8 and 21 EMAs, and then we rolled lower to close the week. And then because this is a shortened trading week, we had Tuesday was our first day yesterday, and then today we did not get the type of action that we were hoping for. Yesterday we closed at the low. Today we actually opened in the green and then pushed a lower throughout the rest of the day. We held in the first couple hours, but then sold off towards the end of the day, closed at the low of the day. And now you can see we're basically right on the 200-day simple moving average here. So this is the Qs, so not exactly the NASDAQ. I know it's supposed to track exactly or similar, but we're going to see if this area holds. After these 2 selling days, my guess is we're going to see a relief rally like we did last Monday, Tuesday, Wednesday before seeing some more selling pressure. So I'm not good at buying the dips. I'm more of a breakout trader, and what I'm seeing is there's no setups to trade, really. So even though we might get an oversold rally or a relief rally here, nothing is really calling me back to the market right now. Let's take a look at S&P 500. Also lost the 50-day simple moving average. I think that was Thursday. Friday, we rallied from the low, but still closed basically flat. And then lower Tuesday, lower today, well into the 50, 21, and 8. Right at that 450 area. This is for SPY. And we got the 200-day moving average at 441.48. So we're 2.3% above that right now. So we'll see if we bounce before that or if the S&P 500 tests the 200-day simple moving average before going up. What really concerns me, and which has been concerning most of 2021 basing out, and then is IWO. This tracks the Russell's 2000 Growth ETF, and I want to go to the weekly chart on this because it shows we've based out. We tried to break out in November. We had a really nice candle. Things finally started looking like they were going to get to a clean breakout there, but we reversed just the next week, followed through down, and then had a little bit of choppiness at the low of the base. And now we've rolled down, and we're basically in the stage 4 downtrend for IWO, which is not a good sign. So that tracks the growth stocks. That's the stocks that I typically trade. And right now, it's just saying there's no reason to be involved in the market. So right now, I'm sitting at 100% cash. Yesterday, I didn't trade at all. There's really nothing going on. Today, I took a couple basically day trades. I don't want to be a day trader, but saw a couple opportunities to make money on the short side. We'll cover that in a second, but really not making much progress. But by staying in cash, I am outperforming the market because market's been very, very tough in 2022. RK, same story. That actually broke a little bit before the IWO, bounced up to that 8-day EMA, 21 EMA in late December, and then rolled over. Had another bounce right up to the previous low. So we had support here on the, let's see what day this is, the 6th, and then the 17th in December on coming down, got supported, and then we rolled under. And then that support became resistance as we tried to rally up to that line, got over the 8-day EMA, but gapped up right into resistance. So I did start a short position there. But the market looks so poor at that day. Is I took the trade off right there when I could have been really in a winning position on the short side. But it was a large position, got out when I felt it was profitable to do so, or when it was profitable to do so, and now just kind of sitting on the sidelines. But looking at a weekly chart, that is obviously not what you want to see from a growth ETF like ARKK. A couple of leaders that I wanted to go over. Tesla, we closed just under 1,000, which is not a good sign. I was hoping that we would be supported there. Earnings in 7 days. So we'll see when... We'll see how we react to that, but right now, under 1,000, under the 50, 21, and 8 EMAs, still above the 200-day, which is at 800, which is basically when we started the breakout here from this previous base. So we'll see if we start rolling lower, but with earnings coming up, I doubt we come back down to test that before earnings. Let's see, Ford, wanted to cover this today because this was one of the few stocks that was holding up very well going into the week. We had a breakout over 25. I traded that. This is one of the stocks that I traded last week, but sold before it came back under 25, traded sideways, and then we got the flush today, breaking under the previous 2 days lows, broke under the 8, and closed at the low of the day under the 21 EMA. Potentially gap filling here and then maybe building a base. I don't know. It seems like they're coming after our market leaders one at a time, which is obviously not a good sign. Qualcomm, another one. Semiconductors was like kind of the last growth group that was holding up well, and they're coming for that now too. With Qualcomm, it was on Friday. This looked great. It looked like, okay, we're tightening up. We're above all the key moving averages. We're trying to break out over Thursday's high, but kind of not an inside day, but lower highs, lower lows on Friday, but still closed well up into the range. Let's see, 83rd% closing range on Friday, looking good. And then Tuesday, we broke under the 50-day moving average, closing under that for the first time. We tested the 50-day on January 10th, but buyers stepped in there. And then today we opened above the 50, took out yesterday's low, and then closed at the low of the day. Earnings in 2 weeks on this. But it wasn't just Qualcomm of the semiconductors that were getting hit. PLAB semiconductor that I traded last year when it broke 18 on this candle, and then sold it, I want to say on this day when we opened down. But now this lost the 8-day, lost the 21 EMA, closing at the low of the day. This is something that I'm looking to potentially short tomorrow or Friday because 18 was such an area of, 18 was the area where we broke out and kind of started that uptrend, or not started the uptrend. The breakout was on the earnings day, but once we consolidated and then broke out, it was over 18. I want to see how it acts at 18, potential short under that 18 area. We'll see. I don't want to short stocks when the market's extended this far to the downside. If I do, it's going to be more of a day trade because I'm going to try to get my stop to even as quickly as possible and look to take profits pretty quickly too. But with this rolling into a key area, we'll see if that holds tomorrow. What's some other ones? AMD, well under the 50-day, 21.8. The 50 days now, starting to downtrend, closed at the low of the day. We haven't taken out the low from Monday, which I guess is a positive, but I mean, this is a sloppy chart, not one that you want to be trading. Nvidia right on 250 now. When we lost 300, that was kind of the warning sign of the market. And now we're another eighth. So what is that? 12.5% below 300. Not super solid there. I want to be positive, but this is a market you just do not trade in. The two stocks that I have that are on my watch list that I'll cover, and then we'll go to any stocks that you guys want to see in the chat, are ZIM. This was a beautiful breakout above 60 on the 11th. I didn't take that trade, or I tried to take it actually. I bought it with a break over 60, and then it reversed, broke under 60, so I got stopped out because I moved my stop up super quickly, and then it rallied maybe a little bit less than 10% from the entry point. So you could be like, okay, Nick, why didn't you put the trade back on? Why did you move your stop up so quickly? Why was your stop set at 60? But you're looking at one trade. And if I didn't do that in the other trades that I've taken, I would be down much, much more than I would be up if I was in this ZIM trade. So when the market is basically in this unfavorable of a condition, you want to be thinking risk management first. You always want to think risk management first, but especially in this market, it's about keeping money and saving money versus how much you can make on the upside. So not super bummed that I wasn't able to get in to hold this, but now as it's coming in, I want to see how this holds against 60. If this can tighten up just above 60, and then the market gets a nice bounce or consolidates and then starts to move higher, this is one that is still above the previous breakout point, has extremely strong fundamentals, earnings per share up over 1,000, and 800% year over year, each of the last 4 quarters. Sales accelerating, 64, 112, 200, 210. After-tax profit margins accelerating. It's in the 13th strongest group of the market, A+ group strength rating, 99 composite, 99 relative strength. This is basically the last leading stock that isn't breaking down. MU was another one that I had on my watch list going into the day, but that broke the 8, that broke the 21, closed at the low of the day, closed right on 90, similar to PLAB, under 90, maybe a potential short. I still don't want to short anything that's above the 50-day moving average because there's weaker stocks out there. Just like we're trying to buy the strongest stocks in the market, we want to short the weakest stocks. But yeah, back to ZIM. If this can tighten up above 60, show that buyers are supporting it when it comes into that 60 range, and then the market firms up a little bit, something that I want to be watching. Strongest stock left in the market. Another one is NEWR. I posted this on Twitter today because it was looking solid. It actually was up like 4% during the day. Did not trade it because, again, the market is not in a good place, so I don't want to be holding anything long. But potential double bottom being put in here. It tested above the 50-day, got rejected. Right on the 8 and 21 EMAs right now. Earnings in 20 days, we'll see how that goes. And these daily candles are still pretty wide, but we're still consolidating right around those key moving averages. I'll be looking for a break over today's high, which was 110.47 as a potential buy point. And I would rather pay up for it when the market's right. That's a Ray term from Traderline. But in this 112.82 area, that's probably a better spot to buy it when the market firms up and we get a higher probability trading environment. Because right now, there's not much edge in the market, so you're better off just sitting on your hands, doing some reading. Read William O'Neill, Nicholas Darvis, Mark Minervini just won the U.S. Investing Championship. He's got 3 trading books out there. Plenty to do. Let's see. Can Can you look at Roku? Yes, let's take a look at Roku. So Roku is in a stage 4 decline right now. Definitely a stock that you want to be avoiding under the 50-day, under the 200-day simple moving average. Those are no buy zones for swing traders. It's not, what am I trying to say? No one knows when the stock's going to bottom, but you don't need to buy the bottom in order to make money in the stock market. You're always looking to push your money into the strongest stocks coming from quality bases. This is exactly what you want to avoid, because everyone who's traded the stock up here, who didn't have a stop loss, who didn't take their trade off, when we get those bounces up to key moving averages, the 50-day, 21 EMA, something like that, you're going to see selling pressure. Just like, was this an earnings news, or what was the news on this one? Anyway, we popped up here and then immediately got pushed down. Tried to hold, got pushed down further. So even when the market turns, I don't want to be buying the stocks that are beaten down the most, that everyone was quick to sell. I want to be buying the stocks that, even though the market was pulling back, everyone that was holding the stock was refusing to sell. So like ZIM making new highs, no one's, or not no one, but very few people are selling this compared to Roku, which is in a very strong downtrend. So not a stock that I want to own. It's in a weak group, 165th strongest group out of 197. The accumulation distribution rating is an E. I want A or B for that. Composite rating 32, want that to be 80s or 90s, and a relative strength rating of 6. You want that to be in the 80s or 90s as well. So if Roku's going to be a monster stock, it'll get back above its 50, above its 200-day moving average, and I will miss a ton of the move, but with those same requirements, I also didn't have this stock in my portfolio once it broke the 50-day moving average and went from 400 to 150. Let's see, mRNA, similar story, under the 50, under the 200-day, under all the key moving averages. We're selling off on high volume. Are we going to get an oversold rally at some point? Absolutely. No stock goes down forever in a straight line. No stock goes up forever in a straight line. So you're going to see a oversold bounce at some point, but not something that I want to be participating in because, again, of this overhead supply. I think, let me go to this chart to see mRNA. So this shows you the areas of supply. It's the volume profile. Actually a decent support area, basically where it's at right now. So are we going to see a bounce maybe at like the 163 area? But once you get back up to the 8-day, to the 20-day moving average, there's going to be a lot of selling pressure there. So not something that I want to be holding on to or trying to trade, at least with my trading style. Some people, I mean, everyone's different. Everyone has different risk tolerance, but the way I'm built, I hate being down in the market. I won't, it really bugs me if I'm ever down on a position. So my stops are at most 7% on a position. But when I'm trading my best, and what I've been trading basically since Q4 of 2021 is my average stop on a trade is 2%, and that's been very tight. I've been stopped out of a lot of trades that then take off, but I also manage my risk very well. Let's see, in Chipotle. Chipotle, same thing, under the 50, under the 200-day, earnings in 20 days. Not something I want to be holding as it's in a downtrend right now. Let's see. Sold puts time ago and now have to roll. Yeah, I don't trade options, so not the right person to talk about that. With options, at least for me, it's tough to manage your risk. I never found consistency with them, and I wasn't trading full time back when I tried that, so maybe it'd be better now. But I feel like I feel much more in control when I'm trading just the stocks. You could always put stop losses in, and the only time you miss your stops is if there's gap down risk, which for the most part, not too much risk there. So are Are we going to get a bounce in these names eventually? Yeah, for sure. But how much are they going to bounce? I don't know. And there's definitely selling pressure overhead when we do get that bounce. So you got to take the positions off quickly if you're going to do that. Maybe we need to find the reverse VCP and short in this hard penny period. Yeah, so one thing, let's see this. One thing that a lot of trading platforms have is if you type in minus and then the symbol, I think it works for this. No, it doesn't. Let me bring up a different trading. Actually, I can't do that. Sorry. So I would say when it comes to shorting, we don't want to be shorting stocks that are oversold and very far away from key moving averages. Like if we short Moderna right here, chances are we're going to get a bounce up to the 8-day EMA at some point, which is an 18% move. And I don't want to be on the hook for, well, I would have a stop in place, but that's a lower probability trade shorting here versus letting it come back to the moving averages, tightening up, and then rolling down further like it did here when it bounced. It bounced up to the 8-day. We had 2 days of tightening, and that's your short right through there. So I know we're kind of always wanting to press buttons, always wanting to trade, but until we get an oversold bounce or a relief rally, something like that, into the key moving averages, 8-day, 20-day, 21 EMA, something like that, I am going to be very hesitant to short anything unless it's a day trade that I can move my stop to even as quickly as possible. It's just, this is a very tough trading environment, and I think there's going to be opportunities in the next couple weeks, but we got to let that oversold bounce happen first. But I like the idea, reverse VCP. DAC. Yeah, DAC, nice breakout. Let's see, good volume. Is there news on this? Let me check. Or if you have the news on DAC, let me know in the comments. Was there earnings? No news. Yeah, so DAC, same group as ZIM. Nice breakout from the base, over $80. I'd like to see it consolidate over 80 and then potentially press out of that area. But nice to see at least one other stock breaking out of a consolidation in here. Let's see, what else? DE, John Deere. Another one holding up super well, actually. Reverse lower today, closed at the low of the day, right on the 8 EMA, but still holding up pretty well. Let's see, SoFi. Yeah, SoFi was one of the stocks that I traded today. I shorted it with a break under 14. So in a tough trading environment like we're in right now, when good news comes out, it represents more selling opportunities than buying. And then in a bad market, when there's in a good market, when there's bad news that comes out, you'll usually see a stock quickly find support and then push higher. So with SoFi, we had this, I think they became a bank or they got the regulations to become a bank, something like that. And we had this giant pop up. Let me go back to the daily chart though. But we were popping up right into these lows. So similar to when ARK popped up into previous resistance, this popped up right on the 21 EM or 20-day moving average on this chart, right into this volume resistance. Keep thinking from the long side. So I said, okay, if this loses $14, I want to short it. And we did basically in the first 5 minutes, started my short position. And then because we're already oversold in the market, this was just a day trade for me. Again, not something that I like to do. I did not get it all the way down. I had a pretty bad close. I could have traded this much better, basically is what I'm saying. But got maybe 2.5%. Shorting it. As it came back up, I took it off. So made a little bit on the trade, and then when it came back again through here, shorted it under 14, made a little bit more. But I'm talking lunch money. Like it probably wasn't worth the risk to take. But with SoFi, it's under all the key moving averages. I know it was the highest volume, but we're going to have to let this build out because there's a ton of volume overhead where we're going to see some bouncing and then some selling, kind of like with plug. Whenever you have a base more than 50% off the high, it takes a long time to build up the right side of the base, and sometimes it never comes back. So with SoFi, maybe it'll be a true market leader in the future, but to do that, it's going to have to get above 20. It's going to have to get above the 50-day, the 200-day moving average, this supply area. So I'm in no rush to buy it for the cheapest price. I want to buy it for the right price, and it gave a short opportunity today. But again, this is more of a day trader's market than anything, so that's what I was doing today. Let's check Microsoft. Microsoft, man, they're even coming for the big liquid guys. Did this pop with the Activision news, or did it go down? I think it went down. But yeah, under the 50-day, not a stock. I don't want to buy any stocks under the 50-day moving average. There's just too much selling resistance up top. But closing at the low of the day today, still have some room before the 200-day moving average. That's at 292, so we have 3.8% until then, and earnings in 6 days. So with all the tech earnings next week, let's just wait to see what happens. We don't have to predict the market. We can react to the market and make money, but this is a low probability trading environment, so it's better to do nothing while the indexes are downtrending, selling off aggressively. Because there will be a time where we find a low, we bounce, we pull back again, it gets supported, puts in a higher low, and then we trend nice and neatly. And this is the time that we want to press and make a ton of money. But to do that, we had 14 days or something in November where it was just nice and orderly uptrend. And then it got a little too extended from the 8-day, and we had that test where we pulled back. Then we got another extension, and then we topped. So we don't need to buy the absolute low to make a ton of money in the market. We need to first and always first manage your risk, manage your risk, manage your risk, and then allow these daily candles to get tighter. Let's have a bounce, pull back, and then start an orderly uptrend. Let's see. Not the most exciting trade, but I got into gold today. Nice. Yeah, gold was the market mover today. I don't know too much about like commodities or anything like that. I really stick to growth stocks, so I don't want to say too much because it's not my area that I've studied. But gold definitely is popping today. Let's see. Yes, shipping lease $870 million in revenue for DAC. Nice. Let's check TMO. Let's see. I think I've traded this in the past. It rings like a faint bell, but very weak group, 176 out of 197 right now. So that's a D- group strength rating. Accumulation distributions an E, composite rating 75, which is okay. But ideally we shoot for 90s composite, 90 relative strength, 85 relative strength. Again, that's okay, but we're under the 50-day moving average. We broke the 50-day on heavy volume, heavier than average volume. Here's the 50-day volume line. So whenever we break and close under the 50-day on heavy volume, it's a stock that I'm very, very suspect of. We had a little rally and then we pushed lower. So we're under key moving averages, the 50-day, 28. Not doing anything that I want to be a part of on the long side. Potential short if we build up under 600 and then roll under there. But we have earnings in 14 days. Don't want to really mess with that. AFRM. AFRM was a great stock to trade when we had this gap up, second gap up. And this is one of the ones that I made. I think this was the first stock that I traded in October after we got the follow, or the day before the follow through day. This broke out 19%. It was a beautiful breakout here. Trended higher, but then you see the daily candles get wider and wider and wider. That usually leads to at least a pullback. Let me see if I can go on here. FRM. A little bit easier to see it on here. See how it flagged out, tried to break over the 8 and the 20, closed slightly under, but then we got that massive move on massive volume. That was such a clean trade. First one to put on in October. And then we just rode the 8-day EMA higher until we got a little bit of trouble and eventually topped. And then from there, we lost the 8, we lost the 20. Earnings, this is so weird because we were down 15%, and then going into earnings day, right at the 50-day, and then we opened up 24% and then just sold off. Once we started selling off after earnings, with this much volatility the last 4 trading days, it was not a stock that I wanted to touch. And then eventually we break the 50-day moving average. We rally back up to it, cannot get over there. We gap right into it. That would have been a beautiful short. Did not take that as a short, but and now we're in a clear downtrend back to the base, and just not a stock that I'm interested in. Again, I'm not trying to trade the cheapest stocks or what seems cheap. Those are the stocks that you want to be avoiding, especially in a tough trading environment like this. You want to buy quality, and probably best, again, just sit and wait, be patient. You don't have to nail the bottom to make a ton of money. We want to be waiting for a follow-through day. This is under the 20, the 8, 20, 200, 50-day. What is this off the high now too? 64%. Yeah, not a stock that we're interested in. Let's see, ENPH. Yeah, ENPH was another one. I bought this power earnings gap. It was nice and orderly up top. We had this one kind of, I don't think this was news. I don't know what happened on the 10th, but I actually added to my position here because we were still above the 20-day. I was still in the money, and I wanted to find a way to get more money into the name because at this point it was the top name in the market. Had that nice push. And then I got stopped out here, and then I tried to trade it. I put on a massive position after we broke here because we had the, what was it? Let me get that out of the way. We tried to rally, got pushed down, and then the next day we stayed in the wick. So this was the wick play that Oliver Kell was teaching about. So when we broke to the upside, I was like, all right, let's size this. This was the market leader at the time. I want all of this. And then right when my order filled, it immediately reversed. And it should have been the opposite. My order should have filled, and then we should have seen buyers rush in. So once that started pulling back, I had such a big size on it. I had to stop it at 1%, 1% loss. And I was thankful that I did that because, again, I would rather miss out on a trade because you can always get back in. Like these trades will always give you another opportunity somewhere down the line to get in before it continues higher. Or if it doesn't give you that opportunity, chances are it's going to be rolling over. And that's what happened here. We broke the 21, broke the 8-day EMA, and then you're seeing heavy distribution. This is not just me and you selling the stock. This is institutions liquidating. Broke the 50-day, liquidating. Not a stock that we want to be trading. What are we off the highs now? 53%. Yeah. Not something that we want to be involved in. Let's see, AFRM, we covered that. Yeah. Matter, another one that it gave you opportunities to trade profitably in November, beginning of November was when all the good trades happened. And then once we top quickly. We lose the 8-day, lose the 20-day. We bounce on the 50-day. We cut it, and then it just rolls, and it rolls heavy. Now, this is literally straight down. Like, you don't see that very often. A 70% haircut in, how many trading days is this? In 34 trading days. You should always have stops in place so you always get out at a profitable measure. But I haven't seen a stock get aggressively sold this quickly. We're probably going to see an oversold bounce at some point. But does it go down another 10%, 20% before that? Possible. And then when it does, this is going to take months to base out before there's a higher probability trade setup with it. Not something that I want to be trading. You can see price relative compared to the QQQ, not showing relative strength. We're always looking for the strongest stocks to buy, not weak stocks that seem cheap for a quick flip. This is going to bounce at some point, but I don't want to be involved in this one. Nvidia, we covered that a little bit earlier, but this was the leader in semiconductors. So once it lost 300, once it lost the 50-day moving average, it was another warning sign in the market to stay liquid, stay cash. And we haven't even tested the 50-day from there. So not something that I want to own. Don't want to own anything under the 50-day. It's definitely not anything that's just in a clean downtrend. And I hate to be so negative, and I don't want to, I've been there. I have lost money consistently for years before I started treating trading like a business, before I started reading Minervini, before I started following the right people on Twitter. Anyone who was the top returners in the U.S. Investing Championship, I started following them. I don't want to come across as like a know-it-all, because what I've learned from my losses and then from studying the great traders. And the great traders all say the same thing. It's about managing risk. It's about cutting your losses quickly. It's about keeping your stops 5%, 7%. The top guys in the U.S. Investing Championship were keeping their stops at 2%, 3% the last couple of years. So if that's what it takes to be a top trader, that's what I want to focus on. And all the top traders trade the top names with tight stops and larger position sizes. And they're not afraid of being stopped out because they're getting stopped at 1%, 2%. They could take that trade multiple times in a leading name and get big money in big winners and ride those uptrends to make money when the market's right. So when the market's not right, they can just sit out, relax, and then start building a list of stocks that are showing good relative strength that they can eventually trade once the market tightens up and we get our follow-through day. But so basically, I don't want to come across as a jerk. I know we went through a lot of stocks that are in stage 4 downtrends, stocks that I want to be avoiding, but I'm saying that because I've made those mistakes in the past and they suck. But until you get those large losses and you just take the position off and you start treating trading like a business, you're going to make those mistakes repeatedly, and it doesn't feel good to hear that. I know, trust me. But in the end, it's not about how we feel. We're here to make money, right? We're here to make money consistently and manage our risk and grow our wealth. And the only way to do that is to cut losses quickly and stay out of the market when it's disastrous. It doesn't mean that we can't buy on the way up once we start seeing the stocks and the market get supported. But it means we're not trying to nail the bottom here. So let me go through follow through day, what I'm looking for before I get back into the market. So I did a video on this on the follow through day, but basically what we want to see is so we just put in a new low here for the QQQs, right? So we want to see a day where the market is green. So say tomorrow we close higher than the close today. That's day one of a potential rally. As long as we don't take out the low of our candle today in the next 4 trading days, so day 1 of a rally, say we do this, day 2, hold on. So say day 1, where we close up, day 2, we move higher, day 3, we move higher. As long as we're not taking out that low, we're in a potential rally here. And then on day 4 or later, so day 1, put in or close higher, day 2, day 3, day 4, we don't take out the low. As long as we're in day 4 or later of a potential rally and we see the NASDAQ or S&P 500 close up over 1% on heavier volume than the previous day, that's the follow-through day. That's when we want to start adding long positions of the leading stocks that are coming out of quality bases or consolidated areas. That doesn't mean we go to Matterport and try to trade that or any of those other stocks that are in stage 4 declines under all the key moving averages. If we get a follow-through day, I want to be trading stocks like ZIM that are holding up well, maybe pulling back, testing 60. I want to be trading DAC that is coming out of a nice consolidation area here. Ignore the last 2 days of Qualcomm, but this kind of base action where we stay above the key moving averages and then we're tightening up. Those are the names that I want to be trading when we get a follow-through day. But again, to do that, we just put in a new low, so we're going to need Thursday, Friday without taking out this low, Monday, and then potential follow-through day on Tuesday. We need 1% or more on the S&P 500 or the NASDAQ with higher volume than the previous day on day 4 or later without taking out the low that we put in today. So between now and next Tuesday, I'm just going to continue to go through my watch list, build a list of stocks that are showing relative strength, that are above key moving averages, that are pulling back on lower than average volume, that haven't broken the 50-day, haven't broken the 21 EMA. And that list is extremely short right now. So am I expecting a follow-through day by Tuesday? No, but I'm going to be prepared for it. And again, if we're trading the top stocks with very tight stops, 2%, 5%, we can take a couple chances at this, but we don't want to be buying when the market's in a downtrend. We want to wait till buyers step in, start supporting it, and then we push higher. Like in here, I was taking some trades with MU. What other names did I trade? MU, PLAB. I tried Tesla. And as long as you move your stops to even as quickly as possible, or you have your stops at 2%, 3%, you're not going to take a major ding to your account, and then you'll have that capital and the mental capital, the emotional capital to try again once we do see more consolidation and another rally attempt. So I don't want to get overly bearish because we're coming up to the 200-day moving average. There's a great chance that we see a bounce, but do we see a bounce, consolidate, and then another push higher? I don't know, but I'll be ready for that because right now I'm sitting all in cash. I'm letting the market play out. And we'll just go from there. Let's see, what other stocks you guys want to see? Facebook. So we're under the 200-day, under the 50-day, under the 21 and 8. Earnings in 14 days. So this is not going to repair itself enough before earnings. This is another one where we'll see how earnings goes, and then we'll go from there. But under all the key moving averages, not something that I want to be holding. Apple broke the 50, closed under the 50 today for the first time. Let's see, what is Apple down from the high? %9 or so. Earnings next week. Again, this isn't going to repair itself enough to actually take a position in this before earnings and get the profit needed to hold into earnings. You should never hold into earnings unless you have a 10% profit or more on a position. Maybe 5% if it's a very, very slow moving stock, but as a growth stock trader, I require 10%. Even then, I don't like holding full positions in earnings. Again, especially in this market. With everything selling off, similar to the SoFi move today, if we see a stock that has great earnings and pops up, say 10%, 15%, but it's going to pop up into likely the 21 EMA or the 8 or the 50-day moving average. So we're likely going to see a pop into resistance. And then if this market doesn't prove itself, doesn't get any stronger, those pops are going to be perfect opportunities for institutions to liquidate their positions, to sell into strength, into that pop, or good short opportunities if we're ready. So going into earnings season, we want to have stocks that are going into earnings that might pop up into key moving averages that are potential shorts for us. So next week we'll have plenty to pick from with a lot of the tech names. Going into their earnings reports. But say next week we get tech earnings reporting and they're crushing it. Those stocks are not only gapping higher, but pushing higher, not getting sold off. Then we're going to see that follow through day come Tuesday, Wednesday, Thursday, something like that. And then we can start getting aggressive again. But we don't have to do the work now. We don't have to take the risk now in order to make a lot of money in the future. Let's wait for the market to prove itself, because when the market gets into these clean uptrends, it's so easy to trade. Remember in 2020, easy to trade, right? In spots in 2021, easy to trade. We just have to let the market shake out, consolidate, and then get this clean uptrend going before we start putting a ton of exposure on. This is not Trade Desk. This is MarketSmith, which I totally messed up. MarketSmith is the sponsor of the video. If you guys want to try it out, there's a link in the description below. I use MarketSmith every day, especially if I'm looking into a new stock and I don't know what they do. They have, here, we'll do like SoFi. Has the information of what they do, has the group strength, fundamentals down here below. It has the industry and the sector, how the stock compares to the stocks within that group. Then you can see all the stocks in the group. It's an amazing tool. It has definitely improved my my trade selection, my stock selection, and then the fund ownership is also very important too. More funds. See, this is interesting. SoFi has a lot of funds pouring in still, but it's still in a downtrend. You usually don't see that. We'll see. If it's going to be a market leader, it's going to get over its 50-day moving average. I do not have to catch the low to make money. Yeah, wait for proof of reversal. Let's do some more Crocs. Under the 50, under the 200-day, so we're not interested in buying this stock at all. It's in one of the worst groups in the market right now. Has a D- accumulation distribution rating. Solid composite rating, 83 there. Relative strength, 86, but that doesn't really tell the story because it's under the 50-day. And look, it came to the 50-day, bounced, rolled under, and then once it lost that 50-day moving average, the 50-day is a great place to just take your profits or take the position off if it doesn't immediately bounce from there. So say it closed right on it this day. We took out the 2 days lows. That's a clean exit point. So I really like the 50-day to see like longer term where things are holding up and what our institution's thinking about the name. You can see institutional ownership starting to flatten out here. 596, 648, 742, 743. So you'll see institutional ownership or number of funds kind of decelerate, but still be increasing as the stock tops. You're not going to see fund ownership decline when the stock tops, at least not what I've been looking through in growth stocks here. So not something that I want to own. Let's put in a base, test 150, test the 50-day moving average. We don't have to buy the low. And GM. Broke under the 200-day moving average today. Earnings in 13 days. Way too much risk involved in trying to buy here because you don't know what earnings is going to do and you're under key moving averages. You're not likely to see a reversal where you get a 10% profit going into that earnings in 2 weeks, 13 days. So not something that I'm super interested in either. WFG. Here's a strong group. Building Wood Products, 7th strongest group out of 197, A+ group strength rating, B- accumulation distribution, yellow flag, but not terrible. 93 composite, strong. 95 relative strength, strong. Earnings were incredible up till September. Now we're starting to compare against some pretty strong earnings, so makes sense. Earnings were down a little bit. Sales still up 86%. After-tax profit margin plus 19.5. We're above the 8-day EMA. We're above the previous breakout point. Fund ownership is increasing, but starting to taper a little bit. Let's see, strongest group in the stock out of 4 stocks. Let's see the other 4. Yeah, LPX just got destroyed. UFPI just got destroyed. I'm a little worried that with LPX and UFPI rolling over, that it's just a matter of time for WFG. But if I'm trading a stock, I want to trade a stock in the strongest group, the strongest stock in the strongest group, and this is one of them. So we'll keep an eye on it. Also, there's a lot of messiness that goes around when you get to $100. So you saw that wasn't clean on this day, broke over, reversed lower. Yeah, we'll see. It's a good stock to put on the watch list. Let's see. Average daily volume's a little bit light for me. I would rather basically like a stock has to be perfect at this point if I'm going to buy it. And average daily volume, I'd like that to be around 500,000 shares, just so it doesn't see as much rapid swings in price. TU. That's clean. Earnings starting to turn around. Sales, okay, not crazy good. Let's check the weekly chart. Nice clean. About 1 million shares traded. I'm seeing this for the first time, so you're kind of in my mind looking at a stock. Fund ownership started basically flat. It's holding up well. We'll see how it acts at 24. Let's see, high 23.99, 24, 23.73. So a break over 24 could be a buy point, but similar to like when I traded with Ford, once it broke over 25, I immediately put my stop right into 25 because this is an area that everyone's watching, or everyone that's trading to you is watching, right? Because we've tested it. So we might have that pressure to break out, but if we reverse lower, that's going to be a sell signal, just like what Ford had when it came back under 25. So it's very hard to spot the leader in the stock because when the market trends back to an uptrend, the fund will instantly move to another sector. Yeah, we've had massive rotation in the market. You've had to be very quick with your selections, but that's where going through your general watch list every day and just like picking the stocks that are showing relative strength, are above key moving averages. If you do it every day and you kind of build a picture of what a stock looks like before it breaks out, you can kind of see the groups that are setting up to break out. Or with MarketSmith, it has the strongest groups in the market. You can just go click on the group, and then you see oil and gas, energy and coal, media, periodicals, oil and gas, banks, oil and gas. So you see the strongest groups in the market right now. They're oil and gas, they're banks, coal, wood, finance, commercial loans. What's in there? That's rolling over too. Chemicals, auto manufacturers. That basically looks like a Tesla chart. Retail, supermarkets. Like none of these are really growth stocks, and I don't want to trade energy stocks because one, it's not my specialty, and there's so much like extra variables that go into that. There's overnight risk. There's political risk. I don't want to have to learn a whole new group of stocks to trade or a whole new sector of stocks to trade. I'd rather just sit out, be patient. I have plenty of trading books to read, plenty of stuff to work on with the channel. So there's other things to do than trade in this market. But like these are not the groups that you want to be seeing as a group stock or as a growth stock trader. See, what are the top 5 on your watch list? I really don't have 5 stocks on my like trading watch list. I have ZIM holding over 60, NEWR. That I usually, so I go through a general watch list. I have about 500 stocks that are above the 50-day, meet my volume criteria, are not banks, are not biotechs, and then are not REITs. That's my general watch list. Usually it's 1,000. In a strong market, there's 1,000 stocks that make that list. We're down to like 400. So I go through that, and then from there I say, okay, what stocks are close to a pivot point where I can potentially trade, maybe think about trading. And usually that's a list of like 45. And then from that list, I'll usually have alerts already set on them, and then I don't need to do any work. But I'll go through and set alerts of where I would potentially buy the stock, anything like that. Now on that list is literally 2 stocks, ZIM and NEWR. Those were the only 2 that made the general list, or the kind of focus list. Usually it's 40, we're down to 2. That's the market we're in. We're gonna see some oversold bounces. I can guarantee you we're not gonna go straight down, but I don't wanna be buying oversold bounces because unless you move your stops quickly in the money, and you can do that, but we're still in a low probability trading environment. So just admit to yourself that you're just in it for the action and not to make money. Do something else with your time. Go through your post-trade analysis of 2021. There's much, much, much more value doing that. There's interviews with Mark Minervini, who just won the U.S. Investing Championship. There's interviews with Leif Sereda. There's plenty of trading content for you to go through to build your edge in the market. Trading in this market is not building your edge. Please do something more valuable with your time at this point. Let's go through a couple more. ON. This was another name that was holding up great. Semiconductors, one of the strongest groups. We flushed lower to the 50-day, kind of built, and then this could have been a potential short, taking out yesterday's low, which closed under the 50-day moving average. I didn't sell it short, anything like that, but down 6.4%. Under 60, didn't even respect 60, the nice round number that it respected last time it pulled in. 59.93, 59, right through there, right through there, right through there. This time it just cut under that. Don't want to be involved. And it sucks. This was one of the names that I traded through here, got stopped out, wasn't a major winner, but this was the strongest group in the market at this time, strongest growth group in the market. So when it popped, I was like, all right, here we go. I have my money in one of the stronger names in a stronger group. Didn't work out. You had to manage your risk, get stopped out, take small money, whatever. But you're protecting yourself against a move from 71 to 60, 14% pullback, something like that. SLF. Yeah, I don't like to trade insurance companies. They're not going to be very fast movers. Again, would just rather sit out and protect my capital and read instead of try to trade insurance. Currently, the oil and gas is more like a shelter for institutional funds. Yeah, exactly correct. Let's see. I'll give you guys a second to put any more charts in the comment section. And I do want to apologize. I feel like I'm coming off like super bearish or like super aggressive with this. I don't mean to be. I just want to like tell the Nick 2 years ago or 5 years ago when he just started trading that you don't have to trade every day to make money. You don't have to trade in a downtrending market. You don't want to buy the cheapest stocks because they're cheap for a reason. There's 1,000 things that with my channel, I'm trying to, one, I'm still learning. We're all still learning, defining our edge and improving our trading. But by doing this channel, the mistakes that I make, I relive them because I share them with you guys. And then hopefully you guys pick up on that and the money that I lost will pay your market tuition. Because we all go through losing streaks. We all go through giving up money to the market. And that's kind of like our tuition. You're not going to be a rock star trader the first year you trade. Maybe in 2020 you were, but how much of that was the market versus how did you do in 2021 when we had those rotations? I know I didn't do as well. It was a great learning experience because I was journaling my trades. I was going through rough patches, but I was learning a ton. And now in Q4, I've been able to make a decent return and then just sidestep the market the last 3 weeks. And that's the goal, right? You want to make money when it's easy to make money, and then you want to be out of the market when it gets tough. And right now, it's tough, and there's plenty of other things to do instead of trading. So I don't see any more charts requests, so thank you guys for showing up. I know this was a kind of a doom and gloom live stream. hopefully in a week, 2 weeks, 3 weeks, we'll get some better setups in the market and we'll go from there. But thanks for showing up. And if you're not yet subscribed, please subscribe to the channel. I do this live stream typically on Tuesday, but short and trading week this week, and then do a breakout watch list on Sunday morning.